All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Today I want to talk about all kinds of crypto news, and after that, I got just a few good, juicy, Saucey crypto memes for us all. And but before I get into that, I kind of want to talk about that my comments are still shut down for now, just for probably a week or two. So they're coming back. It's not. Don't worry about it. Everyone right now has crypto bearish fever, and for some reason are just freaking out at basically any move that crypto YouTubers make. And honestly, just don't really want to deal with it. People telling me what to do, and it's my channel, and gonna do what I want. So, but you can still get a hold of me. You can get a hold of me with my email, which is in the description of pretty much every video I have, and you can also go to Twitter and at MrSotko Gaming. I know that doesn't make sense, but it's an older Twitter that I made when I was a gaming channel, when I was an RTS caster, but it still functions today, and I still use it all the time. So first article I have here is chart shows Bitcoin hitting 91,000 by March 2020. So yet another Bitcoin prediction video, or rather article, and just goes to show that predictions are all over the place for Bitcoin. Now, not to say that I don't think it will hit 91,000 by March 2020, but I just think some of these Bitcoin predictions are a little out of control. This one might be a little bit more on par with reality, but some of the ones that are $500,000 or $1 million and things like that, I think are a little bit ridiculous. Maybe one day they will hit those prices, but I don't think anytime soon, not in the next few years. So here we go. Warren Buffett has concerns about Bitcoin, and Alliance's head of global economics and strategy thinks it could fall to zero. And I'm going to remark on that real quick. $0, I highly doubt it. That would mean that it's just gone completely. Even if cryptos go below $1, they actually just go to cents and then pennies and then sub pennies. So I don't think that's going to happen. And I'll tell you what, if Bitcoin was under $1 or $1, I would buy like at least $1,000 of it, like, immediately. I think anybody would be a fool not to, and anybody. So I'm not the only one that would think that way, right? So a million other people, a billion other people in the world, basically, would think the exact same thing if the price fell to that low. They would probably actually think about that well below it fell, before it falls to that price anyway. So we're not even talking $1, probably even around $100. People would just start pouring millions and millions and millions of dollars into Bitcoin, so that they can pick up a ton of them in case it goes all the way back up to the tens of thousands again. So I just don't think that's going to be the case. Now, there's just too much riding on Bitcoin, and too many people would jump on the train if it went that low. But Tom Lee, Fundstrat Global Advisors' head of research, thinks it could rise to 91,000 by March 2020. Fundstrat and Lee have compiled an impressive database, statistics, and graphs on Bitcoin that helps them to visualize short-term and long-term trends. They include the cost of mining Bitcoins, hourly, daily, and monthly trading trends, and technical analysis. And investing in crypto coins or tokens is highly speculative, and, you know, it's a note there. So Lee also introduced the Bitcoin Misery Index, or BMI, just over a week ago. That is the second lowest point in the past 8 years. It is a contrarian indicator, meaning the lower it is, the more positive the outlook for Bitcoin to move up in price. So Lee and his team have produced a new graph that shows Bitcoin's 4 declines of 70% or greater since 2010. And after the previous 3 drops, it has experienced significant gains, probably eclipsing the returns of any other asset over the same time period. Because the chart has a logarithmic scale, Bitcoin's price movements don't look as pronounced as they would be if it charted on a linear basis, how most graphs are depicted. So kind of shows all of the mass declines that have occurred in Bitcoin, or at least a few of them, over the years. And as you can see, just no matter what, it's just always gone up in price, even now in this extremely bearish market and horrible times that we are in. I wouldn't even really call them horrible. I sort of look positively on any time in crypto, as if the price goes down, well, you just get yourself a bunch of coin, and if the price goes up, awesome, because your portfolio is worth more. So either way is fine with me. So we're going to move on from that, and so 91,000, I suppose that could be a possibility, but and I hope that it is a possibility, but somewhere around there the price should be. But if it's not, I'm not too worried about it. So we got a news article here, the new ways to save crypto from a post-quantum world. So this is talking about quantum computers, which are really not that far off, maybe 10, 20 years, maybe even 30 years, which seems like a vastly, vastly long time, but in reality, not so much. So what if a key piece of cryptography underpinning Bitcoin fell apart? That might sound like science fiction, or even FUD to many crypto enthusiasts, yet hardly a day goes by without some breakthrough in the field of quantum computing hitting the wires. And while the technology will have many benefits affecting humankind, for cryptocurrency holders, the technology could spell devastation. That's because quantum computers have the ability to unwind much of the cryptography that underlies how data, including cryptocurrency private keys, passes through the internet. As such, researchers in the space are playing it safe, already looking for ways to re-architect cryptocurrency systems to be resistant to quantum computing. So my remark, as usual, on this is that the government and governments of the world are going to have crypto computers long before the public is going to have quantum computers. One is just because they have the research capability and the money. And then the next people that will have quantum computers will be universities and scientific organizations. So what I mean by that is, like, right now, the most powerful computers in the world are clearly owned by the government, namely like the NSA, just the US government in general. And then after that, you have the supercomputers that, process huge amounts of data and are essentially located in a big data center, and they're just many daisy-chained computers together, forming a supercomputer in the world. And those are used mostly by scientific organizations. They simulate the weather. They simulate like a solar system being formed. And so they simulate all the individual little particles in a solar system, or all the weather on the planet. And that actually requires incredible amounts of computing power. And so therefore they have those. And then the next most powerful computers are just computers like we have for the most part, or servers or what have you. So that's the way it's going to go with quantum computers too. For example, I read an article one time that stated that the NSA in the late 60s, I think in like 1966 or 7, something like that, had processors that were 600 megahertz. Now, today that sounds pretty weak, and it is, but if you think about it, it wasn't for 30 years in about 1996 or 1997 that you could actually get a 600 megahertz processor. I think the first 600 megahertz processor was probably the Pentium 3, or maybe late generation Pentium 2s. So it just goes to show that the government is likely 30 years ahead of all current technology. And that's not really surprising. It's not really a conspiratorial thing. It's just they have way more money, and they want to be really secret about it. So if you imagine the government 30 years ahead of now, they may have some poorly functioning quantum computers now. And even when quantum computers do come out, I think it's still going to be a sense of scale like it is today. If you 30 years ago, we had, Pentium 3 processors and things like that, or Pentium 2. And, every year a new processor comes out. Every few months a new processor comes out that's 100 megahertz faster than the last one, and faster than the last one. And then the Pentium 4 comes out, and so on and so on and so on. So I don't think it's going to be a quantum computer that's going to be able to process the universe right off the bat. I just don't think that's going to be the case. It's going to be a sense of scale. And again, I don't know why any company, for example, let's say Intel makes a quantum computer. And so you can go to the store, you can go to Amazon or Best Buy or wherever and get yourself a quantum computer in 30 years. Why on earth would they make a quantum computer, even if we could, even if we had the technology and the idea to do it, that was ultimately and utterly powerful, right? Of course they want to make them in scales so that they can sell you a new computer every year, just like they do today. So this is really far off, and So the article goes on to talk about how algorithms can be changed to prevent quantum computers to some degree. It talks about how Monero uses different stealth addresses and things like that, so-called ideal lattice cryptography to replace Bitcoin's digital signature algorithm so that it could withstand quantum computers. And it goes into Monero as well. But for the most part, this article is pretty much a little too early to the show. However, it's never too early, I suppose, to talk about security. But that's my take on quantum computers. I don't think they'll be as powerful as everybody expects them to be, because if you go around on YouTube and you type in quantum computer, you're gonna get this. You're gonna get this. This video that shows how a quantum computer could essentially process more information than like the universe, and we could simulate anything we wanted to. But I don't think that's going to be the case. One, there's corporate greed, and of course they're going to limit these computers anyway, even if it was, because nobody knows if it's actually possible to make these quantum computers ultimately powerful to begin with. And then two, of course, corporate greed is going to get into the way, and they're going to make these computers with different parts, and like, oh, you know, if you pay $1,000, you can get the Quantum X1 processor, and if you pay $2,000, you can get the Quantum X2 processor that operates at blah blah blah, or this processor has 1 million atoms in it, and the next one has processes on 1.2 million atoms for a higher price. So, yeah. And if you don't think that way, then welcome to planet Earth. So next article, trustee of infamous Mt. Gox denies the Bitcoin and Bitcoin Cash sales affected crypto markets. So it's come out recently that the Mt. Gox trustee, who everybody thought that sold 400 million, turns out he didn't sell 400 million in the way we thought he did, or nobody really knows, to be totally honest. The market did crash pretty bad over the course of a few months, and everybody blamed the Mt. Gox trustee Kobayashi, not the hot dog eater, the other one, who crashed the market by essentially selling an unbelievable amount of Bitcoin. Now he denies that, and nobody really knows who to believe. So let's read this article. The trustee of Mt. Gox, once major and now defunct Bitcoin exchange, who reportedly sold over 400 million Bitcoin and Bitcoin Cash around the new year, has stated that he does not believe the sales affected the market prices of Bitcoin or Bitcoin Cash. I don't know about that. Today's report is a transcript of Q&A at the 10th Mt. Gox creditors meeting, which took place on March 7th, 2018, about the selling of the Bitcoin and the Bitcoin Cash by defunct exchange's trustee, Kobayashi. Why would anybody even go to a meeting of Mt. Gox? That blows my mind. Okay, let's continue. The Japan-based Mt. Gox crypto exchange had been the largest in the world until 2014. Hack led to the loss of around 850,000 Bitcoin. The current sales of Bitcoin and Bitcoin Cash by Kobayashi are an attempt to refund the users who lost their money back. So I've been looking around all over the internet, and I've been reading people's comments on this, and people always ask the question, why weren't the investors paid back in Bitcoin? Well, here's the thing. Bitcoin is worth way, way, way more than it was in February 2014. So here's the thing. Let's say you had 5 Bitcoin on the exchange and you're expecting 5 Bitcoin back. Well, today, at today's prices, and maybe, you know, even recently, let's just call it at $10,000, even though the price of Bitcoin is not $10,000 right now, but let's just average it out. Sure, why not? So that's like about $50,000, anywhere from $30,000 to $50,000. That's an incredible amount of money. But if they sold the Bitcoin, or sold all their cash and sold it at a higher amount and gave you that amount that it was worth in 2014, let's say in 2014, just before the hack, I think it was about $1,000 each. So really they only owe you about $5,000. So they can just sell all the Bitcoin and then give you your $5,000 instead of like something like $50,000 or $30,000 or $40,000, depending on whatever the price was at the time that they are, you know, giving it back to you, depending on how they have to do it. So that's why they're doing that. That's why they're not giving the Bitcoin back like that, because it's going to make them a lot more money by just selling the Bitcoin and then giving you chump change so that you can't even buy one single Bitcoin with the money that you probably had 5 or so Bitcoin in the exchange. That's why they're doing that, and so probably... That's probably cleared up. I would imagine that's why they're doing that. So, an earlier report released March 7th to the Tokyo District Court said that he had said that the Bitcoin sales took place between the creditors meeting in September 2017 and the one on March 7th. However, the report released today clarifies that the sale took place between December 2017 and January 2018. The March 7th report, which detailed the amount of Bitcoin and Bitcoin Cash sold by Kobayashi over this reported 2-month period, led many to believe that the large sell-off is what led to the market crash after the new year. Kobayashi noted that after consulting with cryptocurrency experts, he sold Bitcoin. So, you know, if a trustee has to consult with cryptocurrency experts to sell something that's worth a lot of money and doesn't realize it would crash the market, why is he even trusted with this anyway, that he has to consult cryptocurrency experts? I mean, you don't have to be an expert to know that if you're going to sell an inordinate amount of anything, you're going to crash the market, or you're at least going to lower the price. Any educated individual. So after consulting with cryptocurrency experts, he sold Bitcoin and BCC, which they, for some reason, mark in brackets BCH. So whoever wrote this article doesn't know what BCC is. So not by an ordinary sale through the Bitcoin exchange, but in a manner that would avoid affecting the market, while ensuring the security of the transaction to the extent possible. Kobayashi added a clarification about the transfers of Bitcoin and Bitcoin Cash to different addresses, underlining that he did not necessarily sell Bitcoin and Bitcoin Cash at the same time at these transfers. What does that even matter? So here's a quote. So please refrain from analyzing the correlation between the sale of Bitcoin and Bitcoin Cash by us and the market prices of Bitcoin and Bitcoin Cash, based on the assumption that the sale was made at the same time the Bitcoin and Bitcoin Cash were transferred from the Bitcoin addresses that I manage, as such assumption is incorrect. So that's like saying, that's like somebody asking you a question and then you're like, the rabbit went down the hole and the tree fell over. What does that have to do with anything? That was the most nonsense I've ever read. So just because you sold them at different times doesn't mean that you crashed one market or the other. What does that even, how does that correlate with each other? Bitcoin Cash is its own market. Bitcoin is its own market. So if you sold them at different times and crashed the market at different times, what's the difference? Amazing. So it is possible that today's report was released as a way for Kobayashi to refute accusations of his responsibility in the crash, as many in the crypto community had analyzed the times of the transfers of the Bitcoin in an attempt to correlate them with drops in the market price during the same period. However, Cointelegraph did find that a comparison in the transfers and the price showed that there was a negative correlation in the short-run delay. Which I'm just not so sure about. So I think he's sort of trying to save face and is basically saying that, you know, I didn't do it in that way. So there's no determination yet on the future sales of the remaining Bitcoin. And a recent Reddit post summarizing Kobayashi's position from today's reports has garnered conflicting opinions. Reddit user Riviera Frank commented on the post, just because you transact on a dark pool doesn't mean the price isn't affected. Another Reddit user, Simone, or Salmon, whatever, the author of the post, added an alternative explanation for the market dip in the past couple months that does not include Kobayashi. It says large holders sold at a high price, driving the price down on the back of FUD about the Tokyo whale about to dump 160K more Bitcoin because he's been recklessly selling using market orders. It all turned out to be complete bull, as I suspected. Someone else was dumping and manipulating in this way. Once you start an avalanche, there's no way to control it. So whoever said this is a monstrous level idiot, because that's after the fact. He says large holders sold at a high price, driving the price down about the Tokyo whale FUD about to dump 160K. However, it was not clear 2 months ago or 3 months ago that this person was going to sell 160K. So this whole argument on his part is es ist falsch, because that all happened. He's saying that like this FUD happened previously, and that somebody used this market FUD to dump the price, but the price was already dumped, and then this FUD did not come out before the market was dumped. It came out after the market was dumped. So that makes no sense. So I'm not sure how to what to say on the end of this, whether it happened or did not happen. But either way, there's a conflict for sure, and nobody knows. So next article, Bitmain announces new Monero mining Antminer X3. Crypto devs say will not work. So I made a video on this a few days ago saying that this will not work either, and that Bitmain is essentially ripping people off. So what people suspect is that Bitmain was mining Monero in secret. They had created these Antminers, the X3, which is a CryptoNight miner, and mined secretly for months, because the Monero difficulty spiked by about 65%. And the only way to correlate and tie that in is that Bitmain was using these to mine for several $100s a day, and likely $300 a day if it was several months ago or a couple months ago. And when they discovered that Monero was going to do their fork to make sure that they were ASIC proof because of this Antminer, they decided to pawn them off. The original Antminer was sold for $12,000, and now they're being sold for $7,500 in the second batch. So whoever bought these got ripped off. So let's go into the article and see what it has to say on this topic. Bitmain just released the ASIC-powered Antminer X3, designed to mine the CryptoNight hashing algorithm used by Monero. May not be effective by its first release date in May 2018, according to an article by the Next Web published yesterday. So again, as I said, the fork is going to happen on March 28th, and these will not get to your house if you order one till May, so you will not be able to mine Monero on it. The new Antminer announced on Bitmain's Twitter on March 15th comes at two price points, one for $12,000, you heard that correctly, for the first round, and then the next one for $7,600 for the second batch delivered in June. However, the project lead at Monero linked to Bitmain's Twitter announcement in his own tweet, stating that their new miner will not work for mining Monero. And there's his tweet, says, just a reminder, this will not work for Monero. Bitmain is also offering 2 additional batches that ship after the first 2 batches, but only to addresses in Hong Kong. One priced for $3,000, one priced the next batch for $2,000, $1,900. So apparently, following Spagni's response, the sales page for the 2 Hong Kong-bound Antminer X3 batches were updated to contain the following notice and the product description. So this is only for Hong Kong-bound ones because Bitmain is a Chinese company. And also a quick fact: Bitmain, the owner of Bitmain, one of the co-owners of Bitmain is Jihan Wu, or whatever his name is. It doesn't even matter because I don't keep track of it because horrible. Who works with Roger Ver, and he only sells his Antminers in Bitcoin Cash. I wonder, right? Roger Ver, Bitcoin Cash, Jihan Wu, Antminer. Think about it. One major cryptocurrency which is using CryptoNight hash functions. So this is the product description, I apologize. So one major cryptocurrency which is using a CryptoNight hash function is about to change their POW proof of work algorithm. And according to their public statement, it is purposely to brick ASIC mining rigs, including X3. So when you are buying it, you are betting that they are wrong. Wow, that is shady. So basically they are bashing Monero, the Monero devs, and basically alleging that they are purposely trying to brick ASIC mining rigs, and that when you are buying it, you are betting that they are wrong. Well, let me tell you, the developers are not wrong. They know their coin, and they know how to develop it and hard fork it, which they are doing on the March 28th, to make sure that it does not work. The reason why is because people don't like ASIC miners anymore, because they centralize the mining and they essentially kick everybody out from GPU miners. So if you have a lot of AMD GPUs and you mine CryptoNight, you will no longer be able to profitably mine CryptoNight once these miners come out. But now that they're hard forking it, we're all good. So basically Bitmain is frauding everybody and basically ripping everybody off, selling these for $12,000 when they will not work. Now, mind you, they will mine other CryptoNight algorithms, but a lot of other developers are also trying to zig and zag their algorithms. All they have to do is do a hard fork, and they will not be able to be ASIC mined until a new ASIC miner is made with that exact algorithm. The notice adds that there will be no refunds accepted. Of course not, right? A Chinese company, of course. In February of this year, in response to potential threats of new types of ASIC mining that would be able to mine Monero, the privacy-centered cryptocurrency wrote on their blog about their intention to maintain ASIC resistance by swiftly reacting to any potential threat from ASICs and considering slightly modifying the proof of work at every hard fork. So here's a quote. "We strongly believe that it's beneficial to preserve our ASIC resistance. Therefore, we will perform an emergency hard fork to curb any potential threats from ASICs if needed. Furthermore, in order to maintain its goal of decentralization and to provide a deterrent for ASIC development and to protect against unknown or undetectable ASIC development," because remember what I said, that they are potentially mining with these well before they even announce them to the public. The Monero team proposes modifying the Kryptonite proof of work hash every scheduled fork twice a year. So there's that. So when asked why a doorstopper had the word miner in its name, Jihan Wu, the CEO of Bitmain, stated the Antminer X3 looks, works, and sounds like a cryptocurrency miner. It even has a built-in 550-watt heater that hashes an obsolete algorithm. So that's kind of funny. So users on Reddit have quickly taken offense to Bitmain's new Antminer. And a Reddit user posted yesterday, March 16th, an excerpt from a satirical press release alleging that Bitmain was entering the doorstopper business, and said that there. So that's pretty funny. Another Reddit user took a more serious approach, writing that Bitmain is currently performing a large scam. Don't buy Bitmain's X3. They ASIC mined Monero, and now that this will not be possible anymore, they want to dump their machines on you. So there you have it. Bitmain, not looking good. Bitcoin miners can now be charged extra for electricity, New York power authorities say. So I don't really like this article that much, but basically in New York State, miners have been taking advantage of the low-cost hydropower in the state's north, and so the ruling has reported by industry news sites Utility Drive was announced on Thursday. The New York Public Service Commission said the decision was needed to prevent local electricity prices for existing residential and business customers from skyrocketing, which is not necessarily always the case. That's why you have a meter on your house, and you pay what you should be paying for. And you shouldn't be paying much more than that. However, I mean, if it does skyrocket a lot, then the company actually has to order more power. But either way, it should be just to whatever customer. So cryptocurrency mining operations can use thousands of times more than the average residential customer. In some cases, account for 33% of municipal utilities' total demand without commensurate local economic benefits. Even though local economic benefits means they're making money from crypto mining. So I mean, I don't know exactly how that does not tie into local economic benefits. They can pay their taxes with the crypto by selling it anyway, and this is what I mean, and then they can sell it and they can buy goods and services. So again, just an attack on crypto as usual. And then mining a Bitcoin costs about as much as buying one these days. Now, I understand most people do not directly mine Bitcoin, but the article says it costs a fortune to mine one Bitcoin in some countries, with the cost being as much as $26,000 in South Korea to mine one Bitcoin. So it basically goes into why Bitcoin mining, how it works, and I would imagine that we all know how it works at the moment. So it just basically talks about mining and who the winner of mining gets their minted Bitcoin as their reward. But whoever wrote this article kind of doesn't know about pool mining. And so why does Bitcoin cost so much? Fundstrat's model for calculating mining costs takes a few factors into account. The first is the cost of the computers themselves. As the mathematical problems get progressively harder over time, miners need to keep upgrading their rigs. The second issue is energy. Making loads of incorrect guesses uses a lot of it, and then there's cooling. All that energy throws off a lot of heat. So electricity combined with cooling costs, combined with your rig in certain countries, is pretty insane. But it is what it is. So I don't know what uh, what the solution to Bitcoin mining is, but if we make it too easy, then essentially the price of Bitcoin goes down. If you make anything too easy in this world, so right now there's a GPU shortage, and we all might say, well, that's a terrible thing because I can't buy GPUs at a good price so that I can mine. However, if everybody could get a GPU to mine very, very easily, then obviously the difficulty would skyrocket and less people would make money. So it really is a scale, a double-edged sword. If there are a lot of GPUs produced and everybody can get one for $500, or their MSRP value back many months ago, well, great. Then everybody can get a bunch of graphics cards and we can all start mining. But that does have negative consequences if everybody has the same thing. It's kind of like a video game. If everybody has the same awesome power-up, then it's not very awesome, and it's just basically everybody's on the same level. It's kind of like an MMORPG. If everybody in World of Warcraft or whatever had 100,000 gold, then everything would cost an inordinate amount of money. If everybody in like an RPG like WoW, as I just mentioned, all had the best gear in the game, then it wouldn't be the best gear in the game, and everybody would be on the same level. So it just goes to show that rarity is a good thing for some, bad for others. So here's an article from GPU Mining Reddit. The sentiment of crypto has been changing a little bit lately, and it's particularly in the GPU mining sector, as profits are miserable right now. Even for pretty massive rigs, are making very, very little. Some GPUs, even the best of GPUs, are only making a couple bucks a day each. And, last generation 900 series, like 980s, are making maybe $1 a day. So, excuse me, things are pretty far down. So this article is, says too late to start mining, to start a mining farm, ASICs versus GPUs. It says, hey, I want to start a mining farm, but don't know if I should go with GPU or ASIC, which will be there for the long run, and which will give a better rate of income. Or is it even too late to start mining because there are too many big essential players in the game already? And people are saying, I say this as nicely as I can, but by judging by your post, you should definitely not start a mining farm. And he spelled it wrong, as the original guy did. And somebody said this, basically agreeing. Said, yeah, if you're asking here, 10 of 10 would not recommend. So imagine you're boarded on a crowded bus, hardly managed to squeeze in, and somebody farted. And somebody says it's too late, there are too many central players, you won't make ROI on GPU or ASICs or witches. So all very, very negative. Yeah, so break even is like 700 days now at 12 cents a kilowatt with cheap rigs. At least there was a couple of good months. I'm starting to wonder about my last couple of weeks worth of held Bitcoin, though. So everybody's kind of freaking out. Next article on GPU mining. It says, thinking about getting out of mining. Just wondering if anyone is thinking about getting out and selling their gear with everything down and 1080 Ti is making so little. Just thinking the ride might be over. Time to unload gear. What's your thoughts? And, of course, I know what you guys are already thinking right now. Yes, they all said the same thing. One guy says, please sell so the difficulty doesn't go down. And more people are basically all saying the same thing. It says, no, you sell so I can get more. It says, no, you sell, please. And then another one says, no, you. Wait, I have an idea. You can actually shorten that to no, you. And then this one says, you both sell. And it just kind of keeps going and going and going. About everybody selling, sell and sell cheap, I'll buy. So everybody's trying to get everybody to quit mining right now. And it's half joking, half actually honest. So these people are joking, yet at the same time, if somebody quit mining, that just gives more shares to everybody else. It lowers the difficulty, plain and simple. So the more people that quit mining, the less the difficulty is, the more coin we all get as steady miners. So what you have to understand right now is that even though the difficulty is, of course, always goes up over time, that's just a natural thing. even though the price of Bitcoin and crypto is way, way down right now, when you're mining approximately the same coins. If Bitcoin and every other coin is at its all-time high, let's say Bitcoin is at $20,000, and when you're mining, Bitcoin is a huge example of mining. You might not necessarily be mining Bitcoin. You might be mining Equihash. You might be mining anything. You might be mining on NiceHash, but most people are getting paid out in Bitcoin or other major altcoins. So when the price of Bitcoin is at like 20,000, all the other ones are at their all-time high too. So if you're mining and Bitcoin's at 20,000 and you're making $10 a day, let's say on your rig, or 20 or 30, whatever rig you have, you're mining about the same coins as when Bitcoin is at $5,000. It makes no difference. Of course, again, difficulty increases over time. Always keep that in the back of your head, but I'm just sort of not talking about that because I would have to mention it every single time. But it doesn't matter what the price of cryptocurrency is. You're still mining at the same rate. Bitcoin could go to $20,000 tomorrow, and you're still going to be mining at the exact same rate. It looks like you're making more money because it's worth more money, but don't look at the dollar value that you're mining for. Look at how much coin you're getting. So if you keep mining through this bad period, only making a couple bucks or $3 a day with your normal PC or whatever, when Bitcoin goes back to 20,000 eventually, which it likely will, it might take 3 months, it might take a month, it might take a year, all that coin will pay off in the end because it will just triple or quadruple just like Bitcoin will. So just chill. Now on to some juicy memes, some sauce. This one was entitled People Who Bought in December as Opposed to Long-Term Holders. And I thought it was kind of funny. So it's just basically, for anybody that's just listening to it, it's basically a basketball player freaking out because he got a foul or something. And then another one's just standing there. And he's just like, whoa, calm down. Calm down. And then just gives him a handshake. So, exactly. So the longer you're in cryptocurrency, the more you're like this guy here on the right. You're just like, whoa, whoa, whoa. Settle down. Everything's going to be fine. Just keep mining. It'll go back up. Just keep buying. It'll go back up. This one is called What a Manipulated Market Looks Like. Somebody took a screenshot of Bitfinex. They have a 1-minute candle on. I'm not sure exactly what the date is on here, but you can see these are all 1-minute candles, and it goes over the course of a day or so here. And so even all these little tiny individual ones, it's hard to see probably on the recording a little bit more, but all the little individual pixel ones are 1 minute. And you can see the market. This is the normal market. This is the normal market here. All this, all this. But then you see, what is this? And then what is this? So these are basically people who are long-terming the market, essentially with margin buys. And then they buy $1 million in crypto. So then it goes up. And then what they do is they wait a little bit and then they short themselves. They put a short order for a margin buy, and then they sell off that $1 million of crypto that they just bought, and then they sell a little bit more, and boom, it's all the way down on the bottom, and they just margin bought a lot of Bitcoin. And then you can see it kind of happening again here. So this one's kind of funny. It's just mood currently. Bitcoin vets right now. Just holding on tight. Good stuff. But I hope you guys enjoyed this video. Again, if you want to get a hold of me, just email me. In my email, I help people out with various crypto problems all the time for the most part. I get emails quite a bit. And, and check out my Twitter as well. It's just at MrSotko Gaming. And come join the conversation. Also, I have been live streaming much more throughout the day. Just randomly live streaming for an hour, sometimes a few hours, and I'll just play a game usually. So if you see that, don't think that my channel is going to be a gaming channel or something like that. Like, don't think that I stopped cryptocurrency. Just know that I'm just playing a game. I'm having some fun, and you are free to join that live stream whenever you see it up, and come and talk about some crypto. Come and talk about the game. Talk about whatever you want. Just come on, have a good time, and play some games, But I hope you guys enjoyed this video, and I will see you guys next time.